We're 2 hours into trading on Monday, May 3rd. Hello, traders. Let's take a look at the picks from last week. Let's take a look at the market. Let's find some new trades. That's how all this works. OCGN was your pick of the day Friday. Video was recorded right about here. You can see the stock pretty much finished where it started after the video was recorded, but look at the jump today. I had a comment in the comment section of the video asking if I still like OCGN even overnight. My reply was yes, I do like it. Really nice strength in here. You can see how the bid has held. All these gains have held. That tells me that any profit takers in here were met with buyers, and that bid continued to grow until, boom, it rallies through resistance. Yeah, I still like OCGN. Last night, Sunday night, I recorded a video. My trade of the video was TWTR. I suggested selling an out of the money bearish call spread above the major moving averages. The 100-day was the one that came into play here, and I had suggested this morning on the early morning rally trying to sell a 62-63 bearish call spread on Twitter. We did not get the pop in the stock, but it was a nice short pick. Market up, stock down. That is relative weakness. That is the edge that we trade. You can see continual drifting lower, even with that big S&P 500 rally right on the open this morning, which I believe was largely due to beginning of the month fund buying. And you can see that big S&P rally. What the stock do? Down, 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 market up, up, up. That is when you know you've got a really decent position. So, what's the market look like right now? Let's take off that SPY overlay and let's see if we can find some trades for today. You can see this was the high from Friday, and we touched that level briefly, and now we've broken through it and we're kind of hovering around it. I feel that given the price action today, it's very choppy. There's not much going on. You can see a mix of green and red candles, no real pace or momentum one way or the other. We had a 1OP bearish cross right about in here. Market has drifted lower. We've got a bullish cross right now, so we'll probably see a little bit of a rally. Overall, I think that given this downward sloping channel right here, we're probably going to fill in this gap, establish a low, and then we probably will bounce and have a little bit of a rally near the close of the day. Why do I say that? Why am I suspecting that we may have a closing rally? Well, you have to put the S&P 500 into context. Context is super important. How does this puzzle piece fit into the rest of the puzzle? Well, I'm going to click on the daily chart. Doji, 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 doji. What does that mean? That means that where the market opens, it's likely to close. We get a little bit of a range. That is equilibrium. That is buyers and sellers paired off. Trading volumes have been particularly light considering that we've had an FOMC statement. We've had the climax of Q1 earnings season this week. Massive earnings releases. By the end of the week, most of the S&P 500 will have reported. In fact, most have already reported, but we'll be in the 75 to 80 percentile of companies having reported. Ooh, that's interesting. We can take a look at that explosion alert, see what's going on. Nothing too interesting. Still isn't through the high of the day. Hasn't even been able to get to the prior day's high. But back to the market. So within the context of the overall market, we know that there's equilibrium. The market's going nowhere fast. The one big underlying theme right now is do not chase stocks. There's no reason to. We've had an 8% rally in the last month. Even with gangbuster earnings from tech giants, the market has not been able to advance. Even with dovish statements from the Fed, market has not been able to advance. Maybe this week it will. We've got big economic news coming out. ISM manufacturing, ISM services, official PMIs, ADP on Wednesday, unemployment report Friday. They should be incredibly strong numbers with no threat of Fed tightening. That is a sweet spot. If the market continues to compress for another couple of weeks, then I will start to get long. I will have seen enough of the gains hold and that will tell me that the bid is growing and that the buyers are aggressive enough to keep profit takers at bay. Now, if the market does pull back, any dip that we see is going to be a buying opportunity. So I'm going to patiently wait for that to play out. Either way, I'm sidelined. We compress for another week. No big reaction to the upside on fantastic news, but the market is able to tread water. That tells me it just needs some time and it will break out to the upside. On the other hand, any kind of dip is simply going to give me a better entry point, and it will give me an opportunity to evaluate stocks as the market comes in, as the market sells off. I want to find stocks that are holding their own or moving higher. Those are the stocks that are going to take off once the market finds support. So right now on a swing basis, I'm in a holding pattern, but I am looking for day trades. And within the market, there are some great opportunities. So on the surface, nothing going on within the market. If you look underneath, there's lots of rotation. So we're going to take a look at some stocks, see what we can find. Of course, I'm going to go right to my favorite search, Pop Bull. And we'll take a look at the stocks that are in that search. And you can see MRNA got through the prior day's high, a little bit of volatility, but still able to move higher when the market is moving lower. Let's put up that 5-minute chart of the S&P. Market down, stock near its high of the day. Yeah, that's nice. Take a look at the daily chart. Stock is near its all-time high, needs to get through that resistance, but when it does, it's going to be a nice opportunity. SLV, you can see how downward sloping trend line here, bullish flag formation, finds support at the 100-day moving average, breaking out through that resistance. Very nice. Now it's through the horizontal resistance. SLV looks excellent. Precious metals today have been very hot. ABBV, really like this one. Earnings last week before the open. Boom! New all-time high. Look at that. Love that price action. And look at that volume. That is your day trading pick of the day right there. You find that type of relative strength on that type of volume, breaking out to a new all-time high, no resistance ahead. See you later. That stock is going to go. Also, we have a bullish 10P cross right here, so you've got a nice chance for a market bounce here. This is exactly how all the pieces fit together. So you get your bullish cross here, you got a stock with lots of relative strength and heavy volume. All systems go. This is the way that you should be trading the market right now. NEM, another gold stock, precious metal stock. You can see very choppy, not as crazy about that. I love Target. This is a beautiful formation. Downward sloping trend line, breach to the upside, bullish flag formation. New all-time high. Retailers should do very well. Lots of consumers with stimulus checks in their pockets looking to spend. I like TGT. I also like Walmart for the same reason. Look at that breakout. You've got the 200-day and the 100-day moving averages to lean on right now. Nice big rally. Earnings not due until May 18th. So you've still got a couple of weeks before that earnings announcement. I like Walmart. I like Target. Those are excellent plays. Both should do well. ABBV is my pick of the day. I think ABBV goes higher today. I think that it actually sets up very well for a swing trade also. Please leave your comments. If you've got trading questions, leave them in the video section below. I'll answer them. I might even include information on how to address the question that you have in the video. And last week I got a question. Pete, could you spend a little bit more time on exits? So let me take 5 minutes to talk a little bit about how to exit a day trade. So if you're in a long position and you're long from the open and you've got go, 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 market good, 10P indicator moving higher, everything looks good, S&P up near the high of the day, you have to watch the market. Whether you're swing trading or day trading, everything is driven by the market. So we get this nice little rally out of the open. We get this gap higher. So this is where you'd be long very, very strong stocks. And for instance, let's take a look at FDX. Well, you would want to be long that stock early in the day. Stock gapped higher, long green candles closing on their high. Okay, everything's fine in here. Now you get this big blow off rally in here, but what is the overall market doing during that same time frame? Well, it's telling you, hey, there's the first half hour of trading, there's the first half hour of trading, and now you're starting to see a series of lower highs, tails above body or wicks. And you can see every time the market tries to rally, boom, they sell it off. Rally, boom, they sell it off. It can't get through that resistance level, and you've got a bearish 10P cross. So in here, you should be thinking, I got to take profits. I know most people would say, oh no, I would have taken profits up here. Well, you could have, because the formation here that you'd be watching for is market looks pretty weak. Now I need to shift to the stock because I know I need to take profits in here somewhere. Where do I do that? Well, you've got a bearish engulfing candle right here. After a big run, yeah, you should be taking profits, especially when the open of that last long green candle is breached to the downside. That's your clue to get out of the stock. Go to the sidelines, wait to reload. When do I reload? Hey, look at this. We've got a bullish 10P cross. We're back above the low of the day. Okay, that's good. So we should have a nice little market tailwind in here. Stock has been compressing. It's trying to get through this resistance level. So now I'm watching this and I'm seeing if the stock can get through this resistance level and if the market continues to push higher. ABBV would be another one right now that you'd be watching. So how would I play ABBV? I put that as my pick of the day. Big rally. I would not be chasing up here. In here, okay, you can get long that. Even in here, you can. Right now, it's just a little bit too hot for my taste. So now I'm going to be waiting for a dip. What would I do if I were long this stock? Well, I've got a market tailwind. I have a stock that's got fantastic relative strength. I would stay long. There's nothing that tells me that I need to get out of this position. Would I buy it here? No, not necessarily because it's run so far. Would I exit? No, just keep following it up and using an 8 EMA is one way that you can exit the trade. As long as the stock closes above the 8 EMA, you stay in the trade. As long as the stock maintains its relative strength, orange line above zero, you stay in the trade. As long as the market is strong and looks like it's going to continue to bounce, you stay in the trade. If any of those characteristics change, then you've got to start taking profits. The other thing that I should mention is that when you have a sideways market like this, there's just not a lot of momentum. There's not a lot going on. Context. What is the market context? This is a quiet day ahead of major economic releases, ahead of major earnings releases. Traders are not very excited to engage the market. That's why the volume's light. So that means that your trade should be smaller and you should be setting passive targets relative to a day where you get a monster rally in the market that never looks back, where you've got a strong tailwind and you're in a strong stock. In those situations, let the profits run. You can use upward sloping trend lines, use that 8 EMA, use your relative strength as a gauge as well. Use technical patterns like that bearish engulfing pattern that I showed you. When you start seeing tails above body and the stock hits a resistance level, that's a warning sign. You get a candle like this, that's a warning sign. So inverted hammers, long engulfing patterns. You can also go into a Heiken-Ashi formation and look for two flat top red candles, two flat bottom green candles, which show you upward momentum. So you can also use that as an indicator. I do not like having predetermined stop losses. I like to let the positions run. As long as I have the stock with relative strength, as long as I have the market doing what it's supposed to be doing, I'm going to stick with the position and I will gradually scale out, especially if I start to see lots of tails above the body, just like that. So I hope that this tip has helped you with your exit strategies. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.